Alright, what's going on, guys? Welcome back to another video. In today's video, we're going to be talking about how to trade to previous day high or previous day low. Again, it's a pretty simple concept, and I feel like a lot of people just overcomplicate it. So I'm going to give you guys a quick little breakdown on how to find the drawn liquidity, basically to previous day high or previous day low, and how to just make it clear, how to make it simple, and potentially how to enter a trade like this. Okay, so let's take a look. So now, what is price doing here? This is 6 p.m. This is 10 p.m. Not yet. I want to do one more candle. Boom. Okay, 2 a.m. What are we doing? We're sweeping previous day low. And now what are we looking at? Most likely, we're going to go to previous day high. What needs to happen in order for us to do that? Right? We saw previous day low inside the weekly opening gap, inside this higher time frame PD array. What do I need in order to take some longs? I need to see this 4-hour for valid gap get invalidated. So we're going to wait for that. Boom. That 4-hour gets invalidated. Now I'm clearly bullish, right? What is price doing here? Again, we are tapping into this 15-minute for valid gap. Okay. This is BISI. We're sweeping this low. Okay. Sweep. Okay. And now what are we doing? We're displacing through, right? What do I want to see now? I want to see this 5-minute get invalidated, but I want to see how 10 a.m. Again, we know 10 a.m. actually inverses. So if we get a closure through, which right there, boom, see how it inversed? So the 4-hour inversed. What is price doing here? 10 a.m. is opening lower below what? Midnight opening price, tapping into this 2-minute fair value gap. Again, context is bullish here, right? Keep in mind the higher time frame, we saw previous day low, we came to weekly opening price, we reverted higher, and we inversed the 4-hour, meaning previous day high. That's all the way up here is the drawn liquidity. So what am I looking for now? An invalidation from the after the 10 a.m. gives the manipulation. I'm looking for an invalidation. I know we're inside of a 5-minute, which you could wait for, but personally for me, I think we are very bullish here. So I wait for the 1-minute IFEG. This is my entry model, putting my stop right around here, and I'm targeting previous day high. Let's take a look at this. I personally will wait until this to go break even. Okay, now that my stop is at break even, I'm gonna wait for price to deliver to previous day high. Bam, just like that, boom. And that is how you can trade to previous day high. Okay, as you can see, we broke it down. We waited for the previous day low to get swept. We waited for the invalidation again, and you look at the higher time frame, look how much more better this looks. We're sweeping previous day low, we're gonna go to previous day high. This was an open low, right? And look at this. What else are we sweeping? Monday's low as well. So we're going to target Monday's high, and then we ended up going to all-time highs, which is kind of crazy, but all you need is low-hanging fruit, right? And I showed you how to do that inside of this, right? 9:30 open, we came lower, mitigated, we swept the low inside of a higher time frame PD array, being this 15-minute or 30-minute gap, whatever. Again, below 9:30 again. 9:30 came in, boom, swept the low, and now we're looking for continuation. And then 10 a.m. gave us that respected low inside of this 2-minute and the 4-hour inverse. So very A+ setup, A++++. Okay. Now let's go into example number 2. Let's go to Thursday. So we're looking at price action here. What is price action doing? We came to previous day low, right? We have previous day low here, as you can see this low, but you need to apply context. What did previous day low sweep? We swept this low right here. And if you look at this low, and go all the way up, what is that? Previous day high. That is previous day high. So previous day low that got put in swept previous day high low, right? We swept previous day high low. So meaning we're going to target previous day high. What is price doing here? We are respecting previous day equilibrium. As you can see, what did price action do? Let's break this down a little bit even more. What did price action do after sweeping this hourly low, right, which is gonna be the next target, the hourly high. As you can see, this low that gets put in at 10 a.m. puts in Thursday low of the day, sweeping again this low, this 4-hour low. That's gonna make it after the session previous day high, right? So what am I gonna look for? I want to see price action start respecting bullish PD rays, and this bullish breaker gets put in. Any down close candle, boom, we tap into, again, any these down close candles are tapping into a bullish PD ray, and then we close above, forming a higher low and a higher high, right? So we have higher highs, higher lows, higher highs, higher lows, higher highs. We make a lower low here, right? But it's tapping into previous day equilibrium, creating this protected low. Now, what do I want to see? This inside of this, I want to see, right? If you look on the hourly time frame, look at the 6 p.m. is opening lower. We're sweeping this low right here. So I want to be targeting this high, right? That's going to be my break even. And then obviously the same concept is happening on the higher time frame. So I'm just waiting for key levels, right? In this occasion, it's previous day equilibrium. We swept this low, gonna go to that high. Same thing here. We swept this low, right? And that low is the same low that's gonna be targeting as previous day high. Inside of what? A 4-hour Fibonacci gap, which was right here. Okay? Mitigating this. Perfect. So now what do I want to see? What time is it? It's 6:45. I'm gonna wait for 7 p.m. candle. Since that is a protected low, I want to see the 7 p.m. candle be the distribution candle. So now, since the 7 p.m. candle, I'm expecting to be the distribution candle, what are we looking at here? After we swept this low, inside of previous equilibrium, what do? We reverted all these bearish gaps, meaning we're bullish again. So since this is essentially expected to be the protected low, I expect 7 p.m. to be the distribution. So this could be my long opportunity inside of this gap once it gets mitigated. Stop down here, and then I'll target previous day high. My break even could be this internal right here, if you want. For me personally, I believe the draw is higher, so I would wait for these highs. Okay, stop loss is going to break even, and I'm going to target previous day high. Boom, right there. And that's how that gets hit here. And now for our last example here. Again, I'm not trying to go over my entry model specifically, but I'm just trying to show you guys what waiting for it to be undeniably clear looks like. Every single trade that we went through. So obviously Monday, Tuesday, price action was a little wonky, so I couldn't go over those examples because it wasn't good examples, right? For this example, we're gonna mark up our own previous day low and high, so it can be a little bit more. Okay, so in this example, after market closed, we have our previous day low here and our previous day high here. Okay, at this point in time, price is clearly overextended. We have been just going higher without a hard time for retracement. So I'm expecting the next candle to really want to open higher, put it in like an SMT, and then head its way towards previous day low, right? Obviously on the lower time frame will look something like this. We'll get a retracement, probably an SMT, displays lower, retracement, SMT, going lower, right? Until the drawn liquidity gets met, right there. Okay, so essentially we want an open high, low close. Okay, so we want this to get like mitigated, and then essentially price action will just close inside the range again. Okay, that's how we want to see, right? So essentially the whole market is just open low, high close, and open high, low close. But the context that I'm trying to show you guys is most of the time when price action is clear, if it's very clear, we're gonna get an open high, sweeping previous day high, and then you already know the low close is coming, and the drawn liquidity on the higher time frame is previous day low. So you're not gonna fully trade towards previous day low. Like, you can take just low hanging fruit because you know the overall drawn liquidity is previous day low, right? So like, again, I'm not trying to go over entry models. I'm just trying to really just show you guys how to trade, how to understand that the market will most likely lean towards previous day high and book it, or lean towards previous day low and book that, right? So that's what I'm trying to get at here. So for this next example here, let's see what price is doing. So we can see price ends up booking previous day high. Again, we already went over this, right? We swept this low. This is the hourly low. We ended up displacing higher, giving us a confirmation that we want to go higher. We mitigated previous day equilibrium, and then we went to previous day high. Okay. Now, what do I want to see here? Okay. Essentially, I'm bearish, so I want to see what this 4 hour get invalidated. That's the first thing. Boom. I'm gonna wait for that. Boom. See how that 4 hour got invalidated? Bam. Now I'm gonna look in the lower time frame. As you can see, 9:30 ended up going higher. We tapped into this hourly. We swept this internal, and then price started making its way down, right? So now I want to see if I can catch just any continuation lower. Okay. Let's see. Price is tapping that order block. We're coming into this wick here. Essentially, we're bearish, so this should be a protected high. So again, I'm not trying to go over entry models, but essentially, like, this should be a protected high. Maybe we'll put in a 15-minute sweep or a 5-minute sweep of a high here or something. So essentially, that should be the protected high that gets put in, and this should hold, and then we should start shifting structure. So I will look for like a 5-minute change or a 5-minute inversion here. Again, okay, so something like this. Boom. Again, this gets invalidated, right? So again, all this is low resistance. This could be your break even, and then TP1 right here, right? I would take most of my contracts off there because this is all I need, and then I would target this low down here, which is, like we said, previous day low. Okay, something like this. See what happens, and boom, it gets booked right there. Okay, we went break even at this internal, and then it goes lower. Okay, I'm not going over entry models. Again, I know I did go over a few entry models in this recording. I did go over a few because it was just very clear, right? But essentially, the whole point of this video is for you guys to just kind of understand when price action makes sense to deliver. And every single occasion, again, what did I show you guys? We swept previous day low, came into the weekly opening price, 4 hour inverse. We're gonna look for a long. It's most likely gonna go higher. Same thing here. What did we do here? We start new. What did price end up doing here? We had previous day low, previous day high. We swept this low internal. We created this 4 hour order block. Let me show you guys here. Okay, as you can see, boom, we swept this low inside of previous day equilibrium, and we started invalidating all the see how we tapped right here after we swept this low in the 4 hour. We started displacing higher, and inside of here we started invalidating all the bearish gaps and respecting bullish gaps. So the drawn liquidity became undeniably clear to previous day high. You just kind of want to use everything to your advantage. You want to use open, high, low, close, daily profiles, CRT, previous day high, previous day low, and inversions of the higher time frame. Essentially, you're just kind of combining all of it, right? There's no such thing, in my opinion, of like one pattern is all you need. Like, it makes no sense. Don't be a pattern trader. Understand the markets, right? Try to get as much information as you possibly can. Again, like I've said it, I'm not a financial advisor. This is just my own perspective on the markets. And I just wait for it to be undeniably clear. If I see price tipping its hand to one level and we're overextended, I'm going to expect that to be manipulation. And I want to see some shorts, right? If we're going way too high, I want to see price retrace and pull back, right? And I'm just going to look for confluence for that. And I'm not going to react to every little PD rate that gets invalidated. I'm like, oh my God, I'm wrong. No, the markets need to show me, yo, we are completely bullish now. You're wrong. This is not going to go down. Then I will say, okay, you know what? I'm bullish now. And it's okay to be wrong. See, in this occasion, a lot of people could be looking for longs here. But I'm just like, it doesn't make sense to go long because up until we close above 930 high. Once the 930 high gets invalidated and we close above, then I'll be bearish. Then I will invalidate my bearish bias and I'll be bullish. Sorry. Once we close above this high, then I can be bullish. Right, and then my bias for bears is wrong. Okay, and that's just kind of what I want to get at. Okay, just waiting for it to be undeniably clear, and wait for the markets to show you. And if you miss out on the trade and the markets don't give you an opportunity for entry, so be it. There's going to be times where the markets show you its hand a little too late and you're not in the move. And if you're not in the move, you won't be catching the move. You won't be catching the trade, and that is completely okay. If you don't get to catch the trade, you don't get to catch the trade. It's not that big of a deal. Okay, what matters is just waiting for it to be undeniably clear. And if the market tips its hand to you and then gives you entry, beautiful. That's what the whole point of trading is, right? Waiting for it to be undeniably clear, putting risk management on appropriately, and not gambling. You're not supposed to gamble. You're supposed to react. You're supposed to be patient and just, again, take it day by day. With that being said, I'll catch you guys on the next one, and peace.